Hi there, Serial Trader here. Let's have a look at the major US indices, and this is as of Friday's close from last week. So we definitely got that top that was expected here short term, and we failed not so far below the all-time high in January. So 28.72.87 was the all-time high, and we got as high as 28.63.43. Okay, so I think within 10 points or even less than 10 points of the all-time high. So really not too far away. I think it's like a 97% retracement or something like that. So pretty likely that a 97% retracement won't be a retracement and then roll over and make a significant trend change. If you trace 97%, retrace 97% of a move, typically that's going to turn into over 100%. Although there's a slim possibility that it doesn't. But at this point, I'm still favoring that we eventually go up and break those highs, and break them likely significantly. But shorter term here, we definitely have our 5-wave structure in place, and there's various ways to count this overall structure, but currently, as I'm counting it for this, wave 3, but that's certainly subject to change. The overall count is very flexible. You need to be flexible with that. Now, from the top, though, it's pretty clear. If I go in closer to the, let's say the 15-minute price chart. So from the top here, let me just drag these labels over. We'll do a little labeling here on the shorter time frame. Okay. So I think from the top we have a nice little 5 down. And something like this, 1 down, 2 up. Okay. And then we got our clear 3. And that has a nice price gap in it, and that's typically where you see a wave or a price gap is in wave 3, so very nice there. And then a 4 up, and then possibly a 5th down, and now starting to come up in some sort of bounce here, right? So 5 down off the top. Now maybe expecting, some sort of corrective move up. It'll fail to make, a new high above where we were. Some sort of ABC up structure would be likely. Okay, and then at that point, be expecting another 5 down for possibly a larger corrective structure, and maybe something like that. No way of knowing at this point, but just rough roadmap for what to possibly expect here. And then this would be an overall larger, corrective ABC down, for instance. Something like this. And we'll just bump the degree up on that one. Get rid of that. So that's kind of what I'm looking for here. Looks like this bounce is already underway. Later in the session on Friday, started bouncing there. So we could get a corrective bounce for the first day or even couple 3 days of next week. But just based on this overall structure from the top, since we have a nice little impulse 5 down by the looks of it, I would expect a deeper low below this low, and that low is 28.25.81. So that's definitely some structure to be looking for, some levels to be watching. But after that, as long as we do just have a nice corrective pullback and ideally hold above this most recent low, but even if we take it out, obviously wouldn't want to break a more significant low like down here, although that seems pretty far away currently. You'd be amazed how quickly we could get there in a real nasty crash type move, but not what I'm expecting. Aware that it could happen, but currently just expecting some sort of rather tame corrective retracement or a pullback here, and then I'll set up for another wave up and get off to new all-time highs. That's kind of the expectation here. All right, so with that said, we'll go to the candlestick chart. So SPX, we had some indecisive kind of doji days, pausing here at this, I guess we'll call it resistance level, since we were just below the all-time high. So that's so far serving as resistance. Not surprising. You don't typically just smash through a significant level like that. Usually you have to have a little stab at it, come down, and then try it again. So we have a gap down from there, and we've actually gapped down and closed below the T line. So that's at least short term, favoring more bearishness. Although we were rejecting nicely off that 20-day simple moving average on Friday, so still nothing overly threatening. And we were overbought and now starting to come off the overbought condition on that oscillator. So certainly further to come down in a little correction now that we are coming off that overbought condition. Alright, so we'll go to the Dow Jones Industrial Average. And similar picture, Dow finding resistance, although the Dow is much weaker. I mean, it's nowhere near its all-time high, and actually didn't even get to test this resistance level, okay? And that was, 25,800, okay? Got as high as 25,693. All right, so Dow's definitely the weakest of the major indices I'm looking at here. And we've got a gap down, close well below the T line, and kind of finding support here on that simple 20-day moving average, just closing around that point. And oscillator certainly has further to come down before it be oversold. Maybe for the Dow, we'll be looking at that 50-day simple moving average. That might be a downward target here. We'll have to see how it plays out. And that currently would come in at around 24,900. Let's call it 25,000 even. So that's a level to be watching. All right, so NASDAQ composite. So the NASDAQ has all-time high here. Looks like we may have had a little 5 down already in the NASDAQ. And a little bit different structure as far as how it was timed, but similar implications here. So we had a move down, we had a corrective move up that failed to make a new high, and now rolling over. So possibly we're going to have an A, B, C down on the NASDAQ, but it's just at a different stage in the S&Ps. The NASDAQ looks like it already has, 2 waves in of a potential 3-wave correction, whereas the S&P just has the first wave down in. So a little bit different, but similar implications. Gap down on the NASDAQ, although certainly not as dramatic. We're just basically sitting at the T line. And this 50-day simple moving average, which came as support a few times on these most recent pullbacks, maybe that's another place to find some support again, although this would look better if it was just ABC down and made a slight new low below this low, which would be 7604. Let's call it 7600 on the composite here. And the oscillator overbought, and looks like it's just starting to roll down over. So certainly room to run to the downside on that. But we have this channel that's offered support, this Elliott channel I've drawn. So let's see if that holds, or if we actually get down through that channel, which could be a little more bearish. We'll see how that plays out. And you'll see this channel's offered support multiple times, somewhat concurrently with this 50-day simple moving average. So those two are lined up nicely. So definitely favoring some near-term weakness. Okay. And maybe it could be something a lot bigger and we have a major top on our hands, but there's just no reason currently on the chart to think that. If that develops and we have a big move down, then we can start changing our outlook, but not yet. Okay, so the VIX. VIX finally saw a little action there on Friday. Gap up, and then we got as high as 1382, which is still not that high overall here, and closed at 1316 on the VIX. So, I mean, the VIX was as low as it was almost, well, at least since the beginning of 2018, and didn't stay there very long. Had a nice move up here, but still not breaking even this minor most recent resistance level, or certainly this one, or this area. So VIX still showing nothing overly alarming yet, although that could change if we really got going to the downside. So far though, nothing really to speak of. All right, well that should be good. Hopefully everyone's having a great weekend. Serial Trader signing off.